Hi, this is Joseph Greenspan with your weekly market update. It was a busy week with key updates from the Fed, inflation, housing, and the broader economy. As expected, the Federal Reserve held its benchmark rate steady at 3.5 to 3.75%, marking the third straight meeting without any change after last year's cuts. While that wasn't a surprise, the vote showed growing division within the Fed, with four officials dissenting, the most in decades. One favored a cut, while others pushed for patience as inflation remains above target. Chair Jerome Powell also said he plans to stay on the board of governors after his term as chair ends, pointing to the importance of keeping policy data driven and independent. I don't know, I guess he thinks he's a king and he's in charge. So, on inflation, prices move higher. In March, headline PCE rose 0.7%, mainly driven by higher gas prices tied to Middle East tensions, pushing the annual rate to 3.5%. Core PCE, the Fed's preferred measure that excludes food and energy, rose at a more moderate rate of 0.3%, with the annual rate at 3.2. Inflation is still running above target, which helps explain why the Fed is staying cautious on any rate cuts. In housing, home prices have now risen for the seventh straight month, according to Case-Shiller, and even steady gains add up. For example, a $500,000 home appreciating at 3% adds about $15,000 in value over a year, highlighting the long-term benefits of homeownership. New construction was mixed. Home starts rose nearly 11% in March, but building permits fell by a similar amount, suggesting builders are still cautious. Finally, the economy grew at a 2% annual pace in quarter one, up from 0.5% in Q4 of last year, while initial jobless claims remain low, partly reflecting the growing role of gig work. If you have any questions about buying or refinancing, contact First Fidelity at WeSayOK.com, WeSayOK.com, or call us at 1-800-WE-SAY-OK, which is 937-2965, and let us know how we can help you buy or refinance or even do investment properties, and a lot of different programs for self-employed borrowers that require no tax returns. Thank you for your time, and have a wonderful weekend.